Ladies and gentlemen, thank you for joining me. This is Christopher Aaron. It is the very late evening hours of the 21st of February here in the United States. And I thank you for being with me. By the time you see this, it will be Monday morning, wherever you are. We're going to update you on gold and silver and look at the gold to silver ratio. There's been some concern as gold has been moving so strongly higher over the last few weeks that silver hasn't quite kept up, so we'll take a look at that today. I am also going to mention here briefly that I have launched my premium service for those individuals who appreciate the level of accuracy that I bring to my study of the markets and who have an interest in an increased reward and risk tolerance that comes with some of the more aggressive forms of investing that can be done in this sector. That is available on my homepage, and there's a 25% discount for the first 2 months so that people can try it out at a bit of a discount. I'm not going to mention it again. Just wanted to say it right now for anyone who's interested. There was an interesting video released by Mike Maloney in the last few days, and I'm going to have a link to that below, and I just wanted to comment on that first. I have all the respect in the world for Mike Maloney. He's a brilliant historian and fundamentalist, and I've learned a number of things from Mike over the last several years. I have a slightly different opinion from him when it comes to the technical analysis and the validity of certain technical signals that I'm seeing, especially as it applies to silver. So I'm going to be looking at those differences today, and then I'll have a link to his video so you can check out his form of analysis as well. It's always good to get different perspectives on the market. Let's get right into the action. Let's get right into our action in the gold market. It is Monday morning in Asia already, and we had seen more of a consolidation over the last few days. That was nice to see in the gold market. Here showing some weakness by about $10 or so into Hong Kong. Nothing out of the ordinary. Still the price of gold holding above my low range target, which I'm saying was 1190. Of course, you could have a brief dip below 1190, perhaps to 1185 or 1180. Not to close, but perhaps to spike down that low if this consolidation is to remain valid. And let's look at that on the 6-month time frame. Here, of course, we're looking at the GLD fund for charting purposes. And here's that consolidation that I am referring to. This is my idea that if the gold market can now consolidate above its October high, we will be looking at a very bullish scenario for the course of the next year at the minimum. A lot of the people who failed to enter the market in these lows and who saw the price spike up would be currently waiting for the price to come back down below this former resistance zone. And if it fails to do that, when the price begins to accelerate higher, they will be forced to buy in so as to not miss the move higher, and that would cause a rapid price increase going forward. Of course, we want to see this resistance zone hold. And as a technical analyst, one of the things I will tell you is that one of those principles that we see over and over again in markets is those resistance zones become support zones after the price breaks through a level. So that would be something that we are definitely looking forward to. Now, if the price were to negate this support zone, we would then be looking to come back somewhere in the vicinity of this short-term uptrend line that has almost been forgotten. However, this would be slowly rising somewhere into the 1120 to 1130 region if we were to fail here at 1185. This looks good to me right now, and we'll look at some other evidence for this when we look at the silver market. Silver, of course, had been consolidating for the last day or two and showing that similar level of weakness here in Asia. Nothing much to write home about yet. I won't want to judge this day yet until I see the action in New York, especially on Monday. So one of our early warning indicators that we're looking at is this company, Silver Wheaton, that I have mentioned often leads the price of silver. And this is an indicator that I really do not see many people paying attention to, at least on the short-term basis, as I do. I find it to be a fairly accurate early warning indicator. Not 100% of the time, but a significant enough percent of the time that it must be respected. And so what we're seeing here is the price of Silver Wheaton that has broken above its October high. Now, keep this in mind as we look at the price of silver, which is still below its October high. So that leads me to believe that silver is gearing up for a move back to at least match these October highs, which was somewhere in that 1625 region. So what does this mean? We had this trend line here that we've been looking at for the better part of the last several years. It has been broken and it is held above this trend line here for the last 2 weeks. Let's call it what it is, folks. That's a broken trend line. That is shown here in the turquoise color. Broken trend line. Now, this pattern does not look very powerful if you are looking at it from the 5-year time perspective. I will admit that. And that's why if you're ever looking at charts, if anyone is ever showing you a chart, say of 1 year or 6 months, you need to ask them, what does this chart look like from a 7-year time perspective? What does this chart look like from a generational time perspective? Because it doesn't make all that much sense unless we really put everything in perspective. We're not even going to be getting into those long-term charts today for silver because we look at them so frequently on this channel. But my point is that when we look at this bottoming wedge pattern from this close perspective, it really gives us a level of detail that we can't see from perhaps the 5 or 10-year charts. Now, this is a clear break of this declining bottoming wedge pattern. A very nice break. Now, mind you, the signal we looked at in the last series of slides was that Silver Wheaton had exceeded its October high. So where would this put us for the price of silver if we believe that Silver Wheaton is going to be leading the price of silver, as the mining complex often does? Let's follow the bouncing green ball this time, and it would put us somewhere here in that 1625 to 1650 region. So this is why I expect the price of silver has legitimately broken this declining bottoming wedge pattern. Now, mind you, that doesn't mean that it's going to hit this target today or tomorrow. And of course, there could be weakness. You could even see the price, as I said in the last video, continue to grind a little bit lower over the course of this week, the next couple weeks, perhaps into March. And the other thing that could happen is when we hit this level, this looks like it will be setting up nicely for something like a reverse head and shoulders pattern here. If you look at this as a reverse shoulder, this is a reverse head with this target, and then we would very likely see a final backing off to somewhere in the lower 15 region, calling this entire thing over the course of late 2015 through the first half of 2016 a massive bottoming formation. So these bottoming formations really fool people because for casual observers, who don't follow this with the same level of detail that perhaps we do here on this channel, they're looking at the price moving between, say $14.50 and $16, perhaps down to $14 over the course of a year, and they're barely noticing any change, right? We're talking about people who maybe check the price once a month. They look in the paper, what is the price of silver doing? They see really no change when they look week to week or month to month. However, we're zooming in here and we're really focusing in on some of these patterns, and we're getting this signal that this looks like a significant long-term bottom pattern that is forming, taking the form of this bottom wedge breakout. Let's look at this, the gold to silver ratio. So it's interesting. Of course, we are talking about the number of ounces of silver that you would need to purchase 1 ounce of gold. And since the high in 2011, in which silver hit above $48 an ounce and gold hit $19.17, where that ratio hit roughly 30, we have seen silver weaken relative to gold, and weakening here over the last week, even as both rose. The ratio continued to weaken, reaching above 80. Now, this is very interesting because if you notice the types of patterns that I gravitate to, at least as far as bottoming patterns, what we're seeing here is the inverse of that. This is what we would call a rising wedge pattern that tends to form at the terminal part of a rising move. In this case, we're talking about the rise of gold relative to silver. So yes, it's continuing to move higher ever so slightly, but it looks to me like this pattern is going to break at some point during this year, perhaps at the latest by the early part of winter. And this pattern here will break to the downside when it is done in favor of silver at that point. So we must look at this from the generational perspective again. So what we're talking about here is this rise in the value of gold relative to silver amidst what is a 25-year long-term downward sloping channel with massive swings in either direction. And this looks to me like we will be hitting somewhere toward the upper long-term magenta colored trend line here in the later part of this year, perhaps early 2017. So what this could mean is that gold continues to outpace silver for the rest of this year. It could mean that perhaps gold consolidates for much of this year and silver weakens slightly. But it looks to me like when this breaks, we will enter. And look at some of the other time periods here where the ratio broke below one of these primary blue uptrends. For example, this time here in 2003, the ratio was rising for 3 or 4 years, and then boom, a quick move down in favor of silver. This time here, 2008, into the crash of 2009, and then boom, this move down. Another year or two pause, and boom, this move down. So this looks to me like we will be having a move down, which means a move in favor of silver at some point here coming up later this year. Just beginning. This could round out for the next part of the year before moving in favor of silver. That's how I see it. Of course, we are looking at this ratio wanting to approach somewhere between 15 and 20 ounces of silver to 1 ounce of gold as we hit in the 1980 peak in precious metals. Now, a final point on that. We often think, what would be the best metal to invest in? I am not a doom and gloomer, if you haven't noticed that by now. I'm not someone who believes that the world is facing Armageddon. Even if there is a currency collapse. We can look back at some of the studies from the German Weimar hyperinflation. I visited Argentina several times, and they've had a number of hyperinflations over the last 20 years. And the thing that I've taken away from these studies and real-world experiences is that life continues during currency devaluations. People still go out to eat. People still go to the movie theaters. People still go out dancing and listening to music. And yes, there are some changes and there are some hardships, especially for those on fixed incomes. So absolutely, it is good that we are accumulating precious metals and preparing. However, it does not mean the world is going to end. And there is a historic incidence in my studies of the German hyperinflation where something that we should pay attention to is that at the very end of the hyperinflation, gold actually took on a premium to silver, in contrast to the peak in the precious metals that we saw here in the United States. And why was that? It was basically because gold has an ease of portability. You can very easily take a stack of 25 or 30 gold coins and hide them in your pocket or a handbag and go where you want to go with a significant amount of purchasing power. Whereas silver is a bit more bulky and still is very valuable, but it lacks that feature. Do I think silver will be rising relative to gold over the next 5 years? Yes. But is there still, from a historic precedent, a reason to sometimes own gold? Yes. That's why I like a strategy of owning some of each, even if it's only a little bit, perhaps. Thank you for being with me. I will see you on Wednesday evening, and I'll hope to have this video up a little bit earlier on Wednesday.